Hey everyone, today we're joined for a one-on-one interview by Kyle Bass. Kyle is the Chief Investment Officer over at Hayman Capital Management. Kyle, I appreciate your time. Thanks for being with us.
Glad to be here, JD.
So we got to kick things off with the cornerstone of the Trump economic policy. He's calling for not only lower taxes, but higher tariffs as well. How do you view tariffs, Kyle, as an economic policy tool?
Yeah, look, the question is it's painting tariffs with a broad brush. So it's very important to think about in the first Trump administration, you remember the 301 tariffs that they put on aluminum and steel. And you remember the Biden administration campaigned on the fact that they would cancel those tariffs immediately. Notice they haven't. So when you have someone like China as your greatest adversary, as the greatest threat to your national security, if you have a state actor that can act in an uneconomic way in order to take market share in a business, let's just say, in this case, aluminum smelters in the U.S. were running like 82, 83% capacity utilization. That's about where you need to be to just start making money. You have to have a scale of capacity utilization to actually keep the industry in place. Well, if the Chinese aluminum smelters if the government decided to give free electricity to the smelters or subsidized wages, you have a scenario where all of a sudden the global price of aluminum comes down to where no U.S. factory can make any money. And so they can actually effectively put us out of business. And so they could have put our steel business out of business. They could have put our aluminum business out of business. Actually, we didn't put aluminum tariffs that were large enough on aluminum because in the end, they ended up undercutting even those prices that were post tariffs. So when I think about tariffs, they are a very, very effective normalization tool against against a state actor that can act not uneconomically, that can be using that kind of craft to kind of effectuate a very long-term plan to undermine your national security. So I'm a big fan of tariffs. A lot of people say, oh, well, Smoot-Hawley proved that, that tariffs don't work and they just cause inflation and it's disaster. Well, listen, that's when you're running a budgetary primary surplus with the rest of the world. We are now running huge deficits with the rest of the world. If you just think about this fundamentally at the bedrock of tariffs, if you have a global free trade economy, then you're going to basically entropy down to the lowest common denominator, right? You're going to go to wherever the wages are the lowest, that's who's going to make whatever widget XYZ is or process XYZ is. And by the way, it could compromise your national security if you don't have a domestic aluminum business, a domestic steel business, a domestic pharmaceutical business, or a domestic industrial abrasives business, or synthetic graphite. All of those things went to China. By the way, we have to get all of them back from a security perspective. The only way there is through tariffs. And so, it sounds terrible, but it's just true.
How would you address concerns that Democrats and many others make when they say, hey, it's all well and good to talk about tariffs and, in theory it works, but at the end of the day, it is an additional tax that is paid by the American consumer if, as expected, these costs simply get passed down?
Okay. Again, if what you're going to do is have the private sector run U.S. national security, you all better go get a Chinese book. You'll be speaking Chinese tomorrow. It's simple. So if you're a leader in our government, whether you're a Democrat or Republican, you're a leader, you have to understand that there are certain costs we must bear. And I go back to my prior comments. Those costs are, we must have a domestic aluminum business. We must have a domestic steel business. We must produce all of the active pharmaceutical ingredients in our antibiotics. Do you know why? It's like allowing Germany to manufacture our bullets in 1938. That would be insane. That's what we're doing right now. We're allowing many of those bullets to be manufactured by our mortal enemy, by the number one threat to our national security. So when you have a Democrat saying, oh, well, you can't put a tariff on XYZ because it'll raise the cost. This isn't about costs alone. This is about security. You can't have it both ways all the time. You must have leadership, and leadership has got to make those decisions. So, Trump's plan saying, 10% tariffs across the board and 60% on China, clearly that starts us from a negotiating perspective that's actually pretty good. Does it sound hyperbolic? It does sound hyperbolic. However, Notice the Biden administration hasn't turned off those 301 tariffs on steel and aluminum. And the reason they didn't do it is because they shouldn't. And so I think it's important, when we talk tariffs with a broad brush, if you just say, import-export tariffs of 20% across the board, would that make the price of goods go up? Of course it would. Is that kind of mindless? It is kind of mindless, but is it a great negotiating point? It's like Trump talking about pulling out of NATO. Look at how many NATO countries he got to go above 2% of GDP on spending. Now, is it unconventional? Yes. Does the liberal elite think it's crazy? They think it's insane. They actually thought he was serious about pulling out. I think it was an effective negotiating tool to say, hey, guys, you either pony it up or you're out or we're out. And he got action. Again, it isn't how a traditional academic might do it, but he sure got results. So again, I just think a lot of these things are negotiating points.
To the point of cost, which you've mentioned, obviously we're dealing still with a heightened inflationary environment. We're nowhere near the top line inflation of summer 2022. And that's all well and good, but as well as anyone, Americans are still feeling the squeeze at the gas pump when they pay for rent, when they go to the grocery store. What's your view on getting pricing better under control? And I wonder if you could also kind of marry in the previous conversation on tariffs. Is there a risk at all to reversing some of the progress that's already been made? Keeping in mind we've got the election coming up and, just a day or two after another interest rate decision from the FOMC.
Yeah, look. It is important to understand that the Fed printed 40% more money than existed in the world pre-2020. We added 40% more broad money in an 18-month period, and it was reckless, and it was done haphazardly. And we're now kind of dealing with the negativity of that kind of inflation. And the inflation was, I think you and I both know, JD, if you look at the government's own FHFA housing price index, it's up 50% since January 1st, 2020. 50. Okay. The price of car insurance since January 2020 on average is up 43%. Price of home insurance is up 40%. The price of milk is up 42%. It's interesting that they're up just about the same amount of money as we put in the system. Right. And the Fed reports inflation with the BLS on a chain weighted basis. So they say it's only been about 18%, 19%. It's really been about 50. And so with the price level move from 100 to 150, do you think we can get a year over year 150 print, which means inflation would be zero? How they calculate it? Of course we can. Is that great for us that the price levels move 50% in 4 years? It's terrible because, as you pointed out, inflation disproportionately affects the poor and the middle class. The poor were already poor in the first place. They didn't have any discretionary income. So we just decimated the poor. We just took mobility away from the middle class. And traditionally, in inflationary time periods, the rich get richer because they own the assets and they have leverage on those assets. And so they make the inflation plus a little bit. And so when you think about, can we get it under control? The answer is, of course, we can get it under control. We can get a 150 print after going from 100 to 150. But is that good? Is that great? Should we get it back down to like 130? That's not going to happen. So JD, we are not going to pull money out of the system that we put in because it will create deflation and create a recession. So my best answer for you is we can let the Fed and the liberal elite will victory lap an inflation number that comes out that's like +1, right? Or +2. They'll say, we tamed the inflation dragon, but they created the price level move and we're going to live with it.
I wonder how your view of China has evolved at all. I know there's, if I'm not mistaken, you've been bearish on some time, but just kind of taking a deeper dig into the economic situation there. They've announced, a lot of new stimulus announcements as of late. Have your views on that shifted? And what do you think investors should keep in mind as we head into the new year and will, be a new administration regardless of the outcome of the election this week?
Look, you said bearish. I became realistic about China in 2016. I finally saw the Chinese Communist Party for who they are, what they're doing, and what their long-term plan is with the unconventional warfare that they've been basically fighting with us since their ascension to the WTO in 2002. So my views on China haven't changed. Investing in communism never works and never has worked. So I say don't invest a dime in anything Chinese. Number one. Number two, their economy is circling the drain. They're dealing with a complete real estate collapse. They're dealing with a banking system that's insolvent. They announced a stimulus measure of roughly $280 billion. You know, it was in the trillions of RMB or yuan, but it's about $280 billion. The first, roughly, if you went back to our financial crisis, we lost almost $1 trillion in our banking system. The first trillion we printed had no inflationary effects whatsoever, it was just plugging a hole. Then we started generating inflation. China has got to print, in my estimation, somewhere between $1.8 trillion and $2 trillion just to plug the hole. So 282 billion, like revived animal spirits in the riverboat gambling world of equities. But you'll see that it is literally a drop in the bucket for what they have to do. So China has its own massive financial crisis it's dealing with today. And, you know, they severed all macro and micro level data from the mainland to the West back in, call it February, March of 2023. So we don't, whatever data we're getting from China is from their government. Whether you want to believe that or not, you know, is completely up to you. We don't have any empirical data anymore. So, you know, my opinion hasn't changed. My hope is that whoever our next president is, understands the Director of National Intelligence's annual threat assessment report to Congress very well.
Kyle, when you look at geopolitical uncertainty, whether it's Ukraine, Russia, or regions of the Middle East, does any of that kind of strengthen the case, you think, for investing in the United States? Yeah,
I mean, without a doubt. Look, the United States represents 4% of the global population. We represent 25% of global GDP. And we represent 46% of global capital markets. We have the deepest, most liquid, most trusted capital markets in the world. And with the geopolitical uncertainty and the inflation that we push to the world in dollars, you see hyperinflations happening all over the world in other currencies. The only safety they see, I know some people say, oh, well, crypto's 2 trillion out of like global M2 of 100 and 304 trillion. It's still somewhat of a play toy. It's not real. It's not real reserve assets. So, you know, dollars and dollar-based investments in our legal system and rule of law and fee simple property ownership, that we're the envy of the world on the capital side. And so it will all keep coming here.
What do you see as being the biggest risk to the economy as we head into 2025?
You know, when you talk about the economy, or you talk about the cost of living, those are two different things, right? Economists say, well, the economy's fine. Like, we're doing fine. You know, we have real wage growth, real this and that. They're the ones who tabulate inflation. And I don't want to sound conspiratorial. I have studied this in depth. I understand how it works. I understand how they put out inflation numbers that are nonsensical or they're their own fantasy to look good. So the economy looks fine, but when you and I, JD, you talk to a bartender, you talk to a waitress, you talk to an auto mechanic, you talk to someone, even a nurse or any kind of people in the medical profession, those people's lives are much worse today than they were 4 years ago because of inflation. So there's a cost of living crisis that the Biden-Harris administration oversaw in the last 4 years with the money printing, and yet the world can say, well, the economy's fine, the U.S. economy's fine. It isn't fine. So when I think about the risks, the risk is that we enter a recession and we print more money, and inflation continues to rear its ugly head going forward, and wages don't move commensurately. And I think that if you look at the world, if you look at the countries that surround Israel, where the Israel-Iran conflict is, and you look at the countries in the Middle East, then you look at the countries in Southeast Asia and what's happening in China and what's happening in all of these conflict areas and around them, you have a scenario where many of the sovereigns have hyperinflated and the military-age males have nothing to do but go fight. And so the financial architecture, infrastructure of the world hasn't looked this bad since you and I have been alive. It looks pretty good in America as we sit, but around the world, it hasn't ever looked worse than this. You can even go back to the 98 Asian crisis. You can go back to the financial crisis. Things haven't looked this bad in a long time. And so I believe there's no prospect for rapprochement or any kind of ceasefire like People are going to keep shooting. These wars are going to continue to escalate, and it's going to be a problem. It's just the nature of how long these cycles take. So from an investment perspective, I think you want to be invested in the United States. I think you want to be invested in a balanced kind of stock and bond portfolio. You also want to hold some cash because this is not going to just magically turn around and grow again. We're going to have continued conflict, and it's going to escalate and elevate both between Russia and Ukraine, Israel and Iran, and then China is destined to move on Taiwan and the Philippines. Xi Jinping's been saying he's going to do it since 2017. He's told the Biden administration 4 times in the last 12 months that he's going to take it. We better start believing him.
Let's conclude here on a brief positive note. Kyle, give me a reason to be optimistic about the U.S. economy in 2025.
I mean, the U.S., look, we are the beacon of growth in the developed world. We are where all of the innovation happens, where all of the GDP growth is in the West. We are where the best research institutions in the world. Again, the innovation, the schools, the country, the freedoms that we have. And if you're thoughtful about where that inflation's going, think about the migration within our country from high cost, high tax jurisdictions, some would say mismanaged, to pro-business, lower cost, no tax jurisdictions, Florida, Tennessee, Texas, and the coast. That's where all of the economic growth is coming. So if you have an inflationary environment, you also have a nonlinearity in population movement, you can invest around that and you can keep a spread to the inflation that's very healthy. So you just have to be thoughtful about how you're going to apply your capital in the next 10, 20 years.
Kyle Bass is the Chief Investment Officer at Hayman Capital Management. Kyle, very appreciative for your time. Enjoy election week, and thanks for the great context to get us ready to rock. Appreciate it.
You take care, JD.